Okay, let's unpack this. Have you ever been handed something that looks incredibly complicated, maybe uh, a user manual the size of a brick or a contract filled with tiny print and just wish someone could tell you the important parts fast?
Yeah, that's definitely the feeling many get when looking at major legislation. And today, we're doing that for you. Our deep dive is based on provided excerpts from a specific legislative bill, HRLL. It's described as a reconciliation bill from the 119th Congress.
Right, and our mission here is really to cut through all that dense language in these excerpts. We want to find the most significant proposed changes, the key insights, across what turns out to be a really surprising range of topics.
Think of it as your shortcut, yeah. A way to understand what's potentially buried in this pretty substantial document.
Because it is substantial. I mean, legislative text like this is just incredibly detailed, isn't it? Covering everything from taxes and healthcare to immigration, energy, how the government itself works.
It's a lot. It really is a lot to navigate, but we're here to guide you through the landscape these excerpts paint.
Okay, so let's dive in. Let's start opening up this bill.
Well, reconciliation bills are fascinating
Yeah.
because they often bundle together just a huge array of provisions,
Yeah.
stuff from different committees, right?
Mhm.
And H.R. 11, at least based on these excerpts, looks like a classic example. It's bringing together some quite disparate policy areas all under one roof.
And the first really big area these excerpts cover seems to be healthcare programs. We're talking Medicaid,
Hmm?
CHIP, even some specific rules for Medicare Part D.
Exactly. There are some significant proposed changes impacting how people qualify for and receive benefits through these government programs.
So let's start with eligibility, how people get into these programs in the first place.
Okay. Well, the bill proposes increasing how often eligibility for certain individuals is checked. So if you're on Medicaid or CHP, this could mean proving you still qualify more frequently.
And there's a specific focus on verifying citizenship or nationality, I saw.
Yes, that's a key change here. The bill proposes prohibiting the use of federal funds, FFP, for individuals under Medicaid and CHIP unless their citizenship or nationality is verified.
And how do states do that verification?
It actually requires states to use a third party for this verification process. They can't just do it internally, it seems.
So the state has to verify, and through a third party, what happens, while someone is trying to get that documentation together? There used to be that reasonable opportunity period.
Right, that sort of grace period.
Yeah.
Well, under this bill, that safety net is removed from Medicaid. It eliminates the requirement for states to provide medical assistance during that period while someone's submitting their proof.
Wow, okay. What about CHIP?
For CHE, it's a bit different. States have the option to continue assistance during that time, but they're not required to. So it puts a much tighter deadline on individuals to get their paperwork sorted.
That sounds like it could be a significant barrier for some people. What else stood out regarding eligibility or enrollment?
Well, there's also a process outlined to help prevent people from being, simultaneously enrolled in multiple states or programs. Yeah. It requires states to regularly get updated address information from reliable sources, trying to clean up the lists, essentially.
Yeah, makes sense. Okay, what about rules that apply more to the healthcare providers?
Yeah, the bill adds more screening requirements for Medicaid providers. One detail that caught my eye is a requirement for states to check the death master file quarterly.
The death master file?
Yeah, basically making sure enrolled providers are still alive and practicing.
Okay, a practical measure. Any other program level changes? Things about how the system runs?
Yes, there's a provision that removes the good faith waiver related to certain erroneous excess payments under Medicaid. That kicks in around fiscal year 2030.
So making it potentially harder for states if they make certain overpayments.
It seems like it changes how they handle recouping those specific types of overpayments, yeah. And the bill also revises the home equity limit that's used when determining eligibility for long-term care services under Medicaid.
Okay, those are important structural points. Now, here's something that's definitely been debated in other contexts, this proposed community engagement requirement for certain folks on Medicaid.
This is a really significant point. It applies specifically to those who became eligible for Medicaid through the Affordable Care Act expansion. The text calls them specified individuals.
Right.
Starting October 1st, 2028, these individuals would have to demonstrate this engagement as a condition of keeping their eligibility.
And what exactly is community engagement here? What counts?
The definition provided is actually quite broad. It can include things like working, actively looking for a job, participating in education or job training, volunteering, or even providing caregiving.
So it's not just about income anymore, it's tied to activity. Can states get around this? Can they waive it?
No, the bill explicitly states that states cannot waive this requirement, not even through the usual Section 1115 waivers they might use for other Medicaid rules.
Huh. Any exceptions?
There is a provision allowing individuals to be sort of deemed engaged during short-term hardship events. And the bill lays out the whole process states must follow for verifying engagement, notifying people if they aren't meeting the requirement, and giving them a 30-day window to comply.
That's a detailed process baked right into the bill. What about costs for these individuals? Premiums, co-pays.
This is interesting. For these specific individuals, the ACA expansion group, the bill says states cannot impose enrollment fees or premiums. But, and this is a big but, it requires states to impose cost-sharing co-pays, deductibles, something greater than $0.
So no premiums, but co-pays are mandatory.
Exactly. And it puts the responsibility on providers to collect those cost-sharing amounts. That's definitely a shift from how things work now for this group in many states.
Requiring cost sharing while banning premiums, that's a very specific choice. Are there any specific service limitations mentioned in this healthcare section?
Yes. The bill includes a prohibition on using federal funds under Medicaid and CHAP for items and services furnished for what defined as a gender transition procedure.
And does the bill define that term?
It does, yeah. It provides a definition that includes various surgical procedures. And this prohibition, according to the text, would be effective for services provided during a 10-year period starting from the bill's enactment date. Affects Medicaid and CHIP funding specifically.
Okay. Moving from services to drugs. Looks like there are also changes affecting Medicaid drug payments and pharmacy benefit managers, PBMs.
Right. The bill modifies rules around the National Average Drug Acquisition Cost, or NADAC, survey. That's what helps determine how much pharmacies get paid for drugs.
What kind of modifications?
It updates how retail versus non-retail pharmacies are handled in the survey, sets rules for survey compliance, and requires pricing data to be publicly available. It also lets HHS collect fees from PBMs and manage core entities related to drugs.
And speaking of PBMs, they get addressed directly in the Medicare Part D section too, right?
They do. It lays out requirements for contracts between PBMs and the Part D plan sponsors. A key one is that PBMs can't receive income other than what are defined as bona fide service fees.
Bona fide service fees, what does that mean?
Well, the bill defines it, along with affiliate. The idea seems to be restricting their income to transparent service payments, not hidden spreads or rebates. It also includes rules around pricing benchmarks for transparency and requires PBMs to submit annual info to the government starting in 2028. Audits are mandated too.
So, an effort to make PBM compensation more transparent and tied strictly to defined services. Okay, shifting slightly within health, but moving over to the tax code. Some interesting health-related tax provisions popped up.
Yeah, there are a few. The bill proposes changes that would treat certain types of health arrangements, like some health reimbursement arrangement, HRAs, as compatible with health savings accounts, HSAs. It also provides definitions for direct primary care service arrangements.
And I saw something about gym memberships or fitness expenses being treated as medical care for HSAs.
You did see that. This bill proposes that amounts paid for what it calls qualified sports and fitness expenses would be treated as medical care expenses. So you could potentially use your HSA funds for them. The text defines what those qualified expenses are.
That's definitely a new category for HSA spending. Are there changes to how much people can actually put into an HSA?
Yes, the bill proposes increasing the annual contribution limit for certain individuals. But there's a catch. It includes a phase-out based on adjusted gross income. Kicks in above $75,000 for individuals, $150,000 for joint filers.
When would that start?
That change would take effect for tax years beginning after December 31st, 2025. Oh, and it also clarifies that you can contribute to an HSA even if your spouse has a health flexible spending arrangement, an FSA.
Okay, that's a lot packed just into healthcare. But like we said, this bill touches a lot of areas. Let's move on to a very large section. Tax code updates. Looks like it covers both individuals and businesses.
Oh yeah, this is an extensive part. Touches on everything from potential tax breaks for individuals to changes in how businesses handle investments and deductions, and it even introduces a whole new type of savings vehicle.
Okay, let's look at some of the proposed personal income tax relief first. Some of the titles in the excerpts are pretty direct, like no tax on tips.
Yes, the bill includes provisions proposing exactly that, making tips non-taxable income. Also proposes not taxing overtime pay, enhanced tax deduction for seniors, and making car loan interest non-taxable.
And benefits for families? Or employers providing benefits?
Yep. There's a proposal for an enhanced credit for employer-provided childcare, an extension and enhancement of the credit for paid family and medical leave, and an enhancement of the adoption tax credit.
Any others?
It also includes recognition of Indian tribal governments for certain tax purposes, and importantly, it makes the exclusion for employer payments towards student loans permanent and adjusts it for inflation. That was a temporary provision before.
So quite a few targeted relief measures for individuals and families. Now, what about changes to the sort of structure of the tax system, or limitations maybe that affect higher earners or businesses?
Right, this is where the bill brings back or extends some key limitations. It reintroduces the P's limitation. Remember that.
Vaguely. Remind us.
It limits the tax benefit of certain itemized deductions for higher income taxpayers. It's a complex formula, but the effect is to reduce the value of deductions like mortgage interest or charitable giving for those above certain income thresholds. This would apply starting after the end of 2025.
Okay, the P's limitation. And what about the state and local tax deduction cap, the SALT cap? That's been hugely debated.
The $10,000 limitation on the SALT deduction. This bill extends it indefinitely, effective for tax years beginning after December 31st, 2025. It also includes language for adjusting the cap for inflation based on 2024 figures for joint filers.
So that cap, which was set to expire, would become permanent under this proposal. Are there similar extensions of limitations for businesses?
Yes, two major ones. First, the limitation on deducting business interest expenses, that's extended indefinitely, applies to tax years starting after 2025.
Okay.
And second, the treatment of excess business losses for non-corporate taxpayers, think pass-through businesses, that's also extended indefinitely. Limits how much loss they can deduct against non-business income. Both of those were temporary, now proposed to be permanent.
Okay, so making some temporary limitations permanent. Let's pivot to business tax relief provisions. What does this part of the bill propose for businesses?
Well, there's a special depreciation allowance proposed for something called qualified production property.
Production property.
Yeah, it creates a new definition for non-residential real estate that's used in production activities. And it would allow a 100% deduction immediate expensing for the cost of that property.
Are there time limits?
Yes, construction has to begin after January 19, 2025, and the property needs to be placed in service before January 1st, 2033.
What about opportunity zones? Any changes there?
The bill proposes renewing and enhancing opportunity zones. It would allow states to nominate additional zones with a specific focus on rural areas. Up to 25% of a state's low-income communities could be designated.
Rural opportunity zones, okay.
It introduces that concept, qualified rural opportunity zones, and adds some new reporting requirements for businesses and funds operating in these zones. They'd have to provide socioeconomic data periodically.
More opportunities for businesses to expense investments upfront.
Yes. The bill increases the dollar limits for expensing certain depreciable business assets under Section 179 of the tax code, allows businesses to deduct the full cost immediately, up to a higher limit, and the new limits and phase-outs would be indexed for inflation based on 2025 figures.
Okay, and I saw something about repealing a rule for third-party payment networks, like Venmo or PayPal.
Correct. The bill would repeal a previous revision to the de minimis rules for those networks. And relatedly, it significantly increases the threshold for information reporting for payments made in trade or business, think Form 1099 NEC or 1099 MISC.
How significant?
The threshold for triggering that reporting requirement jumps from $600, which is the current law, up to $5,000. And that $5,000 would be indexed for inflation, effective for payments made after 2025.
Wow, $600 to $5,000. That's a huge change for freelancers, small businesses, platforms.
It absolutely is. It would dramatically reduce the number of 1099s issued.
Any other notable business provisions?
Yes. It increases the applicable percentage for the 9% low-income housing tax credit, locking it at 9% for buildings placed in service after 2025. And it increases the gross receipts threshold for small manufacturing businesses to use the simpler cash method of accounting, raises it from $25 million up to $80 million, indexed for inflation.
Okay. And the clean energy credits get touched on here, too.
They do. This section adds a requirement that qualified facilities or eligible components for these credits can't be exclusively or predominantly produced by what the bill calls prohibited foreign entities.
Prohibited foreign entities.
Does it define that? It defines related terms like covered property and directs the Treasury Secretary to issue guidance. It's clearly aimed at supply chain origins, It also modifies certain clean energy investment and production credits by adding phase-out percentages for property placed in service after 2028, eventually phasing down to zero by 2031.
So linking those credits to where things are made and putting a sunset on them. Now, one of the most attention-grabbing new things in this tax section, MAGE accounts.
Yes, the bill proposes establishing a brand new type of savings vehicle called a MAGJA account.
Okay, lay out the basics. What are they for? How do they work?
It's a new savings account. You can contribute up to $5,000 per year, and the money can be used tax-free for qualified expenses.
Which are?
Specifically listed are qualified higher education expenses and, interestingly, qualified post-secondary credentialing expenses. So maybe things beyond traditional college degrees. The bill also allows the Secretary to define other qualified expenses through regulations.
And how's the tax treatment work? Is it like a Roth or traditional IRA?
It's more like a Roth or a 529 plan. Contributions are not tax deductible. But the earnings inside the account grow tax-free, and qualified distributions used for those education or credentialing expenses are also completely tax-free.
Are there penalties if you misuse the funds or, put in too much?
Yes, the bill includes penalties for excess contributions, $500 for negligence, $1,000 for fraud. It also includes administrative details, like needing your Social Security number on the tax return and treating an omission as a clerical error.
It even looked like the government might be able to set these up for kids automatically.
Yeah, there's a provision allowing the Secretary to establish accounts for qualifying children, but it provides an opt-out for the individual. It also includes the usual rules for things like calculating your basis, handling duplicate accounts, and rollovers to other MEGA accounts. So yeah, a new tax advantage tool aimed squarely at post-secondary education and training costs.
That's a really wide range of tax changes, from specific breaks to broad limits, new savings vehicles, business incentives. Okay, let's switch gears again. The bill also dips into agriculture and food programs.
It does. This part modifies several existing programs. We're talking SNAP, farm commodity price supports, and various conservation initiatives.
Okay, let's start with SNAP, the Supplemental Nutrition Assistance Program. Changes to rules for able-bodied adults without dependents, ABAIWDs.
Yes, the bill modifies how states can get waivers from the ADAIW work requirements. It requires the state agency's request for a waiver to have the support of the state's chief executive officer, like the governor.
So needing the governor's sign-off for those waivers.
Exactly. But it includes a sunset. It says the exceptions related to ABRWDs go back to how they are now on October 1st, 2030.
Okay. Any other changes to how income is counted for SNAP?
The bill restricts states from counting third-party energy assistance payments as income for SNAP eligibility. It makes a distinction between households with and without elderly or disabled members on that. It also restricts considering internet expenses when figuring out SNAP eligibility.
Interesting. Moving to farm commodities, the bill sets specific reference prices for certain crops.
It does. These are used in calculating certain farm payments. For example, it sets prices like $630 per ton for peanuts, $13.10 per hundredweight for dry peas, $23.75 for lentils, specific amounts for chickpeas, $0.42 per pound for seed cotton.
And these prices stick around.
They're set to equal the future reference prices, starting with the 2031 crop year. The bill also modifies rules for allocating base acres on farms, which is important for program payments.
What about the sugar program? I saw updates there.
Yes, modifications to the loan rates for both raw cane sugar and refined beet sugar. It also changes the timing and priorities for how sugar processor allocations are adjusted or reassigned if there are shortfalls.
In imports.
It directs the U.S. Trade Representative, working with the Ag Secretary, to reallocate forecasted shortfalls in raw cane sugar tariff-free quotas. And it requires a study within 180 days on whether more terms are needed for refined sugar imports.
Okay. And something new for poultry farmers. Insurance.
That's right. The bill establishes a pilot program under federal crop insurance, specifically for contract poultry growers, broilers, and laying hens. It would provide index-based insurance to protect against losses from extreme weather.
Good to know. Finally, in this section, looks like a lot of specifics on conservation funding.
Yes, the bill provides mandatory funding and extends several conservation and agriculture programs through fiscal year 2031.
Which ones?
Things like the Voluntary Public Access and Habitat Incentive Program, Feral Swine Eradication, EQIP, Environmental Quality Incentives Program, CSP, Conservation Stewardship Program, ACEP, Agricultural Conservation Easement Program, and others. It often specifies dollar amounts or increases for these extensions through 2031.
So a pretty detailed commitment to specific conservation efforts laid out here.
It is. It also mandates funding for the Multiple Crop and Pesticide Use Survey and extends funding for the Pima Cotton Trust Fund and the Wool Apparel Manufacturers Trust Fund through 2031 as well.
Okay. From the farm, let's go to the border. The bill includes a significant section on immigration and border security.
Yes, this part is heavily focused on enforcement, security infrastructure, and processing procedures.
Starting with funding, appropriations.
Right. The bill appropriates $450 million to U.S. Customs and Border Protection, CBP, for fiscal year 2025. Those funds are specifically for border barrier construction, activities related to invasive species near the border, and improving border security facilities.
And funding for ICE, immigration and customs enforcement.
Yes, ICE gets $250 million through fiscal year 2029, specifically to modernize its vehicle fleet for enforcement and removal operations. There's also $50 million appropriated to DHS, the Department of Homeland Security, through 2029 to help return aliens who arrive from contiguous territories like Mexico or Canada.
The bill also seems to limit the authority to grant parole.
It does. It restricts the Homeland Security Secretary's authority to parole aliens into the U.S. on a case-by-case basis. That authority is usually used for urgent humanitarian reasons or significant public benefit.
How does it restrict it?
Well, it specifies that parole, based on helping law enforcement, requires the alien's presence to be required by the government for that specific matter. And it adds that standard visa processing must not be feasible or timely enough. It basically narrows the discretion that was previously available.
Got it. It also looks like the bill introduces or changes a whole bunch of fees related to immigration processing.
This is a really notable part. It establishes or modifies several fee authorities. Most of the money collected goes to the Treasury General Fund. And generally, these fees cannot be waived.
What kind of fees?
There's a proposed $50 processing fee for certain aliens. It introduces fees for getting continuances in immigration court, a fee for filing an application to adjust status with the immigration court, a fee for filing an asylum application with the court, a fee for filing an appeal, and a fee for biometric services.
So adding costs at multiple points in the immigration court process. What about unaccompanied alien children, UACs? Any provisions there?
Yes, the bill includes requirements for the Secretary of Health and Human Services, HHS, which cares for UACs. They'd have to request criminal records and conduct examinations for gang-related tattoos or markings.
And what about the people who sponsor UACs? Take them in.
This is a significant change. Sponsors would be required to provide a lot more information, including their own immigration status and the results of background checks for all adult residents living in their household.
What kind of background checks?
The bill specifies minimums, sex offender registry checks, public records checks, and a national criminal history check using fingerprints.
Does the sponsor have to pay for those?
It seems implied, but the bill does allow HHS to reimburse sponsor fees, but only if the UAC was not ultimately ordered removed from the U.S. in absentia. It also directs the Secretary of State to help facilitate the repatriation of UACs.
Okay. And finally, there's something called a Family Unity Program.
Right, the bill appropriates $100 million to ICE for this program through fiscal year 2029. But there's a string attached. It puts limits on states getting these funds if they have policies that restrict cooperation with federal immigration laws, like not complying with detainer requests or not sharing information about aliens.
So funding tied to state cooperation with federal enforcement, and that's quite a detailed look at the immigration provisions. Let's switch gears again to energy, natural resources, and land management.
Okay, this section outlines changes to how energy resources, particularly oil and gas, are developed and managed on public lands.
It looked like it mandates quarterly oil and gas lease sales.
That's right. It requires the Secretary of the Interior to hold oil and gas lease sales every quarter in specific states, with federal land available like Alaska, Wyoming, Utah, Montana, North Dakota, Oklahoma, and Nevada.
Is there a minimum amount of land they have to offer?
Yes. It mandates offering not less than 50% of all the nominated parcels that are available and eligible in those states. And it requires replacement sales if a scheduled sale gets canceled or delayed, or if less than 75% of the offered acreage gets a bid.
So, designed to significantly ramp up the frequency and amount of federal land offered for oil and gas leasing.
That appears to be the intent, yes.
What about the terms of the leases themselves? Any changes?
Yes, it modifies leasing terms. It increases the annual rental rates to $5 per acre and sets minimum royalty rates at 16 2/3% on a sliding scale. It also sets a 4-year non-renewable term for permits to drill.
The bill also gets very specific about leasing in the Arctic National Wildlife Refuge, ANWR, and the National Petroleum Reserve Alaska, NPRA.
It does. For the ANWR coastal plain, it requires the reissuance of oil and gas leases that were previously canceled by the current administration.
Reissuing canceled leases. Wow.
And it mandates subsequent lease sales in the ANWR coastal plain at least once every 2 years, starting the year after enactment. For ANWR lease revenues, it specifies a 90-10 split. 90% to Alaska, 10% to the U.S. Treasury.
And it seemed to streamline the environmental review process for these sales.
That's a key point, yes.
Mm-hmm.
The bill states that previous environmental studies and assessments, referencing specific ones from 2019-2020 for ANWR and 21-6-2017 for NPRA, are basically deemed sufficient to satisfy NEPA, the National Environmental Policy Act, for these subsequent lease sales.
So no need for new environmental impact studies for future sales covered by those old reviews.
That's what the text says. It essentially locks in those previous analyses.
And for NPRA, the National Petroleum Reserve.
Similar to ANWR, it requires subsequent lease sales there at least once every 2 years.
Okay. There's also a focus on critical minerals leasing in this section.
Right. The bill allows companies holding critical mineral leases under the Mineral Leasing Act to request a 10-year renewal. This renewal would cost $20 per acre. And notably, it specifies that approval of a full mine plan of operations is not required during the initial 10-year term of a critical mineral lease.
Section 80202 mentions some definitions related to renewable energy projects on public lands, but the real focus here, the mandates, seem heavily weighted towards fossil fuels and minerals.
Based on these excerpts, yes, the mandates around oil, gas, and critical minerals leasing are definitely much more specific and directive.
And finally, in this section, the bill does something pretty direct. It prohibits the implementation of specific Bureau of Land Management, or BLM, resource management plans.
That is an unusual move to see in legislative text. It explicitly prohibits implementing, administering, or enforcing the recent BLM plans for the Rock Springs and Buffalo field offices in Wyoming and the Miles City field office in Montana. It even references their recent approval dates.
So Congress stepping in to directly override specific, recently finalized agency land management decisions.
Yes, it's a clear exercise of legislative power directly intervening in agency action, not just setting broad policy.
That brings us to the final broad segment we have excerpts for, government operations and miscellaneous provisions.
Right, this is sort of the catch-all section. Covers administrative changes, funding for various initiatives, and some potentially really significant structural reforms to how the government itself operates.
Regulatory reform looks like a major piece here.
It is. The bill proposes amending the process for reviewing and approving certain agency rules. It adds new, very detailed requirements for the reports agencies have to produce when they issue a rule.
What kind of requirements?
Things like really in-depth cost-benefit analyses, lists of related actions the agency is taking, an estimate of the rule's effect on inflation, and interestingly, a specific statement justifying the constitutional authority for the rule.
So, significantly increasing the analytical burden and scrutiny on agency rulemaking.
Absolutely. It also empowers individual members of Congress to request official determinations from the Comptroller General about whether an agency action counts as a rule, or specifically a major rule.
And why does that distinction matter?
Because the bill requires congressional approval, a joint resolution passed by both houses for any major rule that increases revenues before that rule can take effect.
Whoa. So Congress would get a direct up or down vote on major regulations that bring in money, like certain fees or taxes implemented through regulation.
That seems to be the implication. It's a potentially huge shift in the balance of power between agencies and Congress on those types of rules. There's also a sunset provision mentioned for previously designated eligible rules if Congress doesn't approve them within 5 years.
Okay. What about changes impacting federal employment?
There are two really notable provisions here. First, it modifies how average pay is calculated for federal retirement benefits under both CSRS and FER systems.
How does it change?
For employees retiring on or after January 1st, 2027, the calculation shifts from using the highest 3 consecutive years of pay to using the highest 5 consecutive years. That generally results in a slightly lower average pay figure for calculating the pension.
Okay, a tweak to retirement calculations. What's the second one? It looked like something about at-will employment.
This is potentially a very fundamental change for future federal employees. The bill allows individuals initially appointed to certain covered positions after the bill's enactment to make an irrevocable choice they can elect to be employed on an at-will basis.
At will, meaning they can be fired more easily without the usual civil service protections.
That's the standard meaning of at-will employment. The text explicitly states this status applies notwithstanding other federal employment laws, including those governing performance appraisals and adverse actions, like firing or suspension. If they don't make this election, they fall under specific rules outlined in the bill.
So, creating a potential pathway for future federal hires in certain jobs to essentially opt out of traditional civil service job security, that's a massive shift.
It really could be, yeah, for those positions covered.
What about funding for government operations? Anything specific jump out?
The bill appropriates specific funds for various activities. For instance, $500 million goes to the Department of Commerce for fiscal year 2025, available through 2035, for an artificial intelligence and information technology modernization initiative.
AI modernization.
Yes, including deploying commercial AI and automated decision systems within the department. It does include some limitations on fees or bonds related to these AI systems. There's also specific funding mentioned for OMB, the Office of Management and Budget, for IT and AI modernization, and for the Office of the Inspector General, OIG, for audits relating to SNP, Medicaid, and CHIP eligibility verification.
Okay. The Coast Guard gets a mention too.
Yes, the bill authorizes ordering members of the Coast Guard Selected Reserve to active duty for pre-planned missions, supporting the active component. But it comes with strings attached. The manpower and costs for these missions have to be specifically identified and justified in budget submissions to Congress.
Gotcha. And then there's this proposal for a new federal transportation fee collected by states.
This is an interesting mechanism, yeah. It establishes a new federal registration fee on motor vehicles. States would be required to collect it.
How much?
Initially, $100 for the first registration after the bill passes, and then $50 annually after that. Both amounts would be indexed for inflation. States would have to send the money they collect monthly to a federal administrator, probably FHWA, and the funds get deposited into the Highway Trust Fund.
So a new federal fee, but using states as the collection agency, specifically for highway funding. That's a different approach. Any other miscellaneous appropriations catch your eye?
The bill includes funding for the 250th anniversary of the U.S. founding, and also for establishing and maintaining the National Garden of American Heroes, referencing specific executive orders related to those.
Right. And finally, it looked like there was a really, really detailed list of specific military construction projects.
Yes. Section 2014 is basically a long list of appropriations for dozens of individual military construction projects and related defense spending items.
Like what? Can you give a few examples?
Sure. It includes funding for developing and producing anti-ship missiles, expanding missile production capacity, dealing with diminishing manufacturing sources for parts, buying medium-range air-to-air missiles, new armed cooperation programs, producing Navy long-range interceptors, developing a second source for solid rocket motors, expanding Missile Defense Agency production.
Okay, so lots of weapon systems and production capacity.
Yes, and also specific facilities, funding for barracks, aircraft parking aprons, maintenance facilities, water treatment plants at various bases around the country. The bill also requires detailed plans and expenditure reports for how this money is used.
Wow. Okay, let's just take a step back for a second. We just walked through excerpts of one bill, H.R. 11, and look at what we found.
Yeah.
Changes to Medicaid and CHIP eligibility, new work requirements, cost-sharing mandates, limits on certain procedures, major tax changes like making the SALT cap permanent, extending business limitations, but also creating new breaks like no tax on tips or overtime, plus a whole new ManGA savings account.
Right, then updates to farm programs, SNAP rules, specific commodity prices, conservation funding, a huge section on immigration border wall funding, ICE fleet modernization, new fees, limits on parole, extensive requirements for UAC sponsors, funding tied to state cooperation.
Then mandated oil and gas leasing, reissuing canceled ANWR leases, overriding specific BLM land plans, changes to regulatory review giving Congress more power, major potential shifts in federal employment with at-will options.
And funding for government AI, a new federal car registration fee collected by states, and incredibly specific military construction line items.
It truly highlights the immense scope of what can be packed into a reconciliation bill, doesn't it? How many completely different parts of government and daily life can be touched by one piece of legislation.
Absolutely. And understanding a bill like this, it's not just about reading a headline or a summary. It's about seeing these detailed provisions, sometimes seemingly unrelated, all bundled together.
And that's really what we aim to do here to give you that shortcut, pulling out the key proposed changes we found directly in the text of these excerpts to help you get informed quickly on the sheer breadth of what's being considered here.
So thinking about this vast array of topics we just covered just in these excerpts, from, how federal employees might be hired to how states handle immigration funds to energy leasing rules to who qualifies for health benefits, what does the very structure of a bill like this suggest to you about how policy gets made, how these seemingly separate areas are all interconnected in the legislative process?
It definitely leaves you wondering about the overall vision or maybe the trade-offs involved in combining such incredibly diverse measures into one single package. Something to think about.